Everyone's talking about XRP's latest move, but here's the truth: 99% of traders are about to get this completely wrong overnight. Something happened behind the scenes that could flip this entire market on its head. It's not just about charts. It's not just about hype. This is about a very real change that almost no one saw coming. And if you're holding XRP right now, you need to hear this before the day is over. Let's break down exactly what's happening. XRP just tested a major price level that traders have been watching for months. At the same time, three separate forces have collided. Legal clarity from the Ripple versus SEC case, a shift in Federal Reserve policy expectations, and a sudden surge in whale activity that's shaking up liquidity across the market. We're not just seeing a technical bounce, we're watching a setup that could lead to one of the biggest short-term moves XRP has seen in over 2 years. Let's start with the technicals. Right now, XRP has broken back above its 50-day moving average and is pushing toward its 200-day. That's a clear sign of momentum building. We've also printed a bullish engulfing candle on the daily chart, which in simple terms means today's buyers completely erased yesterday's selling pressure. But here's the detail: the average trader is missing the MVRV ratio just entered what analysts call the golden zone. This is historically where XRP has made its fastest percentage moves. In 2017, this zone triggered a 65% run in less than a week. In 2021, it led to a 90% rally in under 10 days. Right now, we're seeing that same setup again, but with a twist that could make it even more powerful. Because buried inside a newly filed legal document is a clause that could instantly change XRP's liquidity profile. I'm talking about the kind of change that can double the speed of price moves both up and down. If this plays out, we could be looking at the fastest market reaction since the 2021 bull run. I'm going to show you exactly what's in that document in just a moment, but before that, you need to understand what the whales are doing. In the last 48 hours alone, we've seen over 320 million XRP move between unknown wallets and top-tier exchanges. That's not retail volume. That's deep-pocket institutional players repositioning. And here's where it gets interesting. The majority of these transfers have been going off exchanges, not onto them. That's accumulation behavior historically. When whales pull large amounts of XRP off exchanges, it's because they're preparing to hold, not dump. Combine that with the fact that funding rates across perpetual futures markets have dropped into neutral territory, and you have the perfect environment for a short squeeze if buying pressure continues. This is the kind of setup that catches leveraged traders completely off guard. Alright, here it is. This filing confirms that Ripple's next phase of institutional sales will operate under a structure that avoids the same restrictions that killed liquidity back in 2022. In plain English, Ripple will have more flexibility to move capital between its partners and market makers. Why does that matter? Because it means market depth will increase, which allows big players to execute large orders without causing massive price slippage. That kind of liquidity efficiency can be a game changer when momentum starts building. So what does this mean for price? The immediate resistance is sitting around $3, and above that we have the previous yearly high at $4. If XRP can close above that first zone on strong volume, we could see a rapid push toward the next level in a matter of days. But, and this is important, if we reject a resistance, the downside could be sharp. Liquidity pockets below $5 could get filled quickly, especially if stop losses start triggering. That's why I'm watching the $3 level like a hawk over the next 48 hours. It's not just the charts. Institutional sentiment toward XRP has changed. We've seen multiple research desks upgrade their short-term outlook, citing legal clarity and improved global payment adoption. Even hedge funds that were previously skeptical are now looking at XRP as a macro hedge play against slower SWIFT payment systems. The timing here is wild, because all of this is happening as the market is pricing in a potential Federal Reserve rate cut in the coming months. Lower rates generally weaken the dollar, which historically benefits alternative assets like cryptocurrencies. If the Fed delivers on that, it could give XRP's rally another layer of fuel. Now, Let me be clear, while the setup looks bullish, nothing in markets is guaranteed. The same conditions that can trigger a breakout can also trap traders if momentum stalls. That's why position sizing and stop-loss placement are crucial right now. Don't FOMO into green candles without a plan. The bottom line? XRP is at a turning point. The legal clarity is here. The whales are moving. Institutional sentiment is shifting. And the macro backdrop is aligning in a way we haven't seen in years. The next 24 hours will tell us everything we need to know about whether this rally has legs, or if it's just a head fake before another pullback. Tomorrow, I'm covering the one technical signal that's been 100% accurate in predicting XRP's biggest breakouts over the last 5 years. You're going to want to see this before the next move happens. Click right here to watch it now. With XRP currently valued at $3.11, projections point to a potential surge ranging from 607% to as much as 1,507%. This kind of growth would push XRP's market capitalization into the $1.3 trillion to $3 trillion range, far above its present $186 billion, why an ETF launch could be a game-changer for XRP's valuation. Analyst Nguyen's forecast aligns with several market studies suggesting that the approval of US-based spot XRP ETFs could mark one of the most transformative moments in the asset's history. ETFs offer regulated market access for both institutional and retail participants, who may prefer indirect exposure over holding XRP directly. A notable difference between XRP and Ethereum is that ETH provides staking rewards, which could deter some investors from choosing ETF products. XRP, however, has no staking mechanism, meaning investors would not miss out on yield opportunities by opting for ETF exposure. Stephen McClurg, CEO of Canary Capital, a firm applying for an XRP ETF, highlighted this advantage. In a recent podcast, he explained that XRP's established role in the payments sector, combined with a global community of millions, adds weight to the expectation of strong early demand. XRP price projections based on ETF capital inflows. As anticipation builds for XRP ETF approvals, various experts and market models have outlined scenarios for potential price movement. Predicts $5 billion in inflows during the first month based on analyst Dom's 272x market cap multiplier. This could send XRP's market capitalization to $1.546 trillion, equating to about $26 per token, within Nguyen's projected range. Another forecast, comparing possible XRP ETF flows to Bitcoin ETF performance, estimates that if XRP captures 35% of BTC ETF inflows since launch, around $16.3 billion, and applies a 100x multiplier, its market cap could hit $1.759 trillion.